Hi everyone. Thank you, Carlson, for the lunch break session. So now we have the panel, Crypto Regulations Friend or Foe. And for today we have Mr. Matthew Lovett, who will be moderating the session. So open the floor to you. Thank you so much.
Thanks, Sabrina. So hi, everyone. Thank you for joining us for this panel session today entitled Crypto Regulation, Friend or Foe. I'm Matthew Lovett and I'll be moderating the session. I'm a tax partner at Deloitte Singapore, specializing in the provision of structuring advice to fintech, blockchain, and crypto stakeholders. And I'm also a member of the executive committee of the Singapore Fintech Association. Joining me today are Frederick Fung and Ajinkyo Tupule. Frederick is the chairman of the Association of Cryptocurrency Enterprises and Startups Singapore, or Access for short. He was part of the core team in the development of the Code of Practice facilitated by the Monetary Authority of Singapore and developed in consultation with the Association of Banks in Singapore, and conducted the independent assessment report for virtual asset service providers, third-party solutions provider. As the director of Access Node, Frederick helped develop the first diploma in blockchain in Singapore with PSB Academy, launching in Q2 of 2022. Ajinkya is the General Counsel and Chief Compliance Officer at Bitflyer Europe and advises central banks, regulators, and Fortune 100 companies around the world. He has over 13 years' experience in financial services, innovation, and antitrust matters, with a firm base in payment systems and trading infrastructures. The OECD has recognized Ajinkya as being the very first to explore use cases of blockchain for regulatory enforcement and compliance purposes. If anybody would like to direct questions to Ajinkya or Frederick throughout the session, you may do so by entering those into the Q&A box in the platform console. Now, as time's short, I'd perhaps like to jump straight into today's session. And to start, I think it's fair to say that crypto has been attracting an increasing amount of attention from regulators, which is perhaps inevitable as crypto applications grow and usage increases. Ajinkya, what opportunities do you think that gives rise to, and what roles do you see for fintech and RegTech solutions within that context?
Thanks, Matthew, for the introduction and for moderating us today. And
I think we may have a slight problem with Ajinkya's connection. Frederick, do you perhaps want to take that question to begin with and maybe share any thoughts from your perspective?
Certainly. So as of right now, with the massive growth of cryptocurrencies and virtual assets, when we started the code of practice, we during then there wasn't a lot of RegTech tools available, and it was still a constantly growing space. And today it has matured a lot. I think one of the main things we have seen is the rise of eKYC because of how digital the business that surround our space is, and that we continue to use advanced technologies to prove, like, how do we establish a natural person, right? And this is a very big step forward, especially for our space, and together with even transaction monitoring tools. And right now, as we've seen more and more travel rule service providers that actually assist us with this industry to comply with the travel rule, and what we've looking at is more interoperability within that space, so that the even if there are multiple providers, they are able to collaborate with each other and ensure that the information is transmitted accordingly. And so I think what it means in the RegTech space is that as the base layer for these things grow even more, what we're going to see is even more adoption throughout a lot of the different companies that want to penetrate this space, but also more interoperability between the service providers themselves as well.
Okay, that's great. Thanks for sharing. Ajinkya, can I just, you can hear us?
Yeah, can you hear me?
Perfect.
Okay.
Yes, we can. So apologies.
Okay.
I'm not sure whether you heard the question before we posed it, but the context was around obviously crypto has been attracting an increasing amount of attention, which is perhaps inevitable as its
Yep.
applications grow and usages increase. Are you able to maybe share a little about what you see as the opportunities that gives rise to, and where there could be relevance and interest for RegTech providers?
Absolutely, absolutely. I did hear the question. Thanks, Matthew, for moderating us. That indeed is a very important question. Now, when we talk about crypto assets, I think there's one very important element that I always like to mention, which is the speed of evolution of crypto assets. That's been something we've never before in almost any other sector or technology. And maybe the rise of the internet kind of in a relative sense. So kind of the opportunities are and risks are all over the place. Anything you can do is an opportunity in the business at the moment.
Mm-hmm.
There are, of course, a number of ways of looking at this. So one way is a regulator's perspective. Perhaps first, now at the beginning, most regulators didn't bother looking into crypto assets. For the simple reason that they just didn't take it seriously enough. They didn't think it would be as widespread as it is today. They didn't believe it posed any risks as it does today. And they definitely didn't believe that it would evolve at the same speed. I can confirm because I was a regulator when that thinking was ongoing. Now, interestingly enough, the speed at which it has evolved, and it's gone from crypto assets to centralized exchanges to decentralized exchanges to now decentralized finance altogether, kind of got off in Morgan and arms. I'm just not sure. I think my audio is a bit patchy. I think on both sides.
I think we're struggling on my side. I was just trying to establish whether it's the same for everybody. I can see you're on Wi-Fi. Do you potentially have access to a hardline connection?
I could do that, yes. If you give me a moment, I will. Maybe Frederick, you could just continue on.
Sure. Maybe Frederick, you and I can continue for the moment.
So, definitely.
I guess. Sorry, I interrupted. Did you want to go ahead?
No. I think something very interesting to talk about is I'm not sure if you've seen the recent news about the bill that was leaked for crypto regulations in US. I think it was this morning, and that sparked a lot of conversations, especially with one of the biggest things that is going to be sort of discussed is the treatment of DAOs, decentralized autonomous organizations. And it said that inside the bill, and I paraphrase here and just summarize it into this very interesting aspect, is that they will be seeking DAOs to be registered entities, over in the US, and I think this is going to be a very significant challenge. I think it also resonates with the topic today, right? Crypto regulations, friend or foe, because it kind of looks at it from a few different angles. Number one, it could be a friend towards consumer protection, but at the same time, it could be a foe to, let's say, these brilliant developers who are creating these things. And I think one of the most famous examples that we always look about is Uniswap, right? When we talk about decentralized AMMs, market making, and also all of these so-called swaps or exchanges, if you will, they are sort of governed like a DAO, right? Because the Uni token is a governance token. And so asking them to be registered in a particular country, let's say, for example, even in US, I think that would bring a very big, significant challenge into this space, especially in the decentralized finance space, because at the same time, the people who use it typically are also the same people who really like their privacy or anonymity, and that I feel is actually quite it shifts the needle between friend and foe, right? And with that being introduced, I do see a lot of these protocols facing a decision, whether they are going to continue in that space, or would they just say, oh no, because we are completely decentralized, we are using the internet, we can continue to exist, we just push on code. And that would spook the regulators even more, right? And so we are at this juncture right now, especially with this particular scenario that's happening. Luckily the bill has not passed yet in US, but it does face these very significant questions. Does it really mean that everyone has to be registered and therefore be allowed to operate? But then after registration, what's the next step? Is it even more regulation? Does it mean that we have to start licensing DeFi? But at the same time, is that when we say, oh, we have to start licensing these DeFi registered entities like a DAO, it loses its decentralization, right? And so it really sparks many different topics and a lot of challenges that DeFi will continue to face in the coming months. And I think this is something that it's worth sharing and discussing about. There is no perfect answer. In fact, there is no answer considering how new it is. But I think it's very relevant, especially with how innovation in this space is projecting itself towards.
Yeah, it's interesting, isn't it? I mean, I think it's a really important point that you make around this whole that the whole basis and the whole basis of the technology is the decentralization. And
Yeah.
if you look at the way regulators have typically regulated in the past, it's sort of relied on maybe inherently sort of a level of centralization.
Yeah.
So it comes down to the point, okay, how do you balance those two aspects in a way that satisfies the different stakeholders?
Mhm.
I mean, if I look at this from a practice perspective, as I mentioned, I mean, I play in sort of quite a discrete space in the sense that I'm an advisor to relevant stakeholders when we're structuring projects, when we're launching those, including DAOs. And there's quite often this disconnect around how the technology and how the DAO is intended to function. And how do you account for that given the traditional legal concepts and the need for sort of corporate entities or particular people that are responsible for the original setup and operation. So perhaps interesting to see that some of what we're seeing, at least from a tax and structuring perspective, is also echoed from a regulatory perspective, because it's the approach in the past has been inherently sort of based on a centralized approach, and the technology is now putting that under pressure. Ajinkya, I can see that you're back. Are you able to hear us? Ajinkya?
Maybe in the meantime, I'll continue with
Sure.
Yeah, because after reading it, I was very passionate about it.
Sure.
At the same time, if I flip the other side around, right, it's that, do people really care about the decentralized? We know that they really care about the anonymity, but at the same time, most users would favor more of privacy protection versus anonymity, right? I always like to say this is that my PayNow transactions are not anonymous, but they are the privacy of which my PayNow transaction is protected, right? It's the responsibility of the bank to protect my privacy, right? And if DeFi could replicate this sort of environment, would it be the middle ground that a lot of people would be willing to use, correct? And that's where I feel that there might be this middle ground to see where the regulators would want to see things developing towards. But at the same time, it's a very difficult conversation to have, right? Because it's like saying, okay, now if I use Uniswap, do I have to do my KYC? Is it Uniswap's responsibility to protect my identity, or is there a RegTech solution out there that allows me to verify my wallet before using it, or something along those lines, right? And if you look at transaction monitoring tools as well, can transaction monitoring tools cover cross chains and still continue to track? Because as soon as I bridge one crypto asset from one particular blockchain to another particular blockchain, it kind of it starts breaking up already. And bridges, although they keep a record themselves, some of them do, some of them don't, but those that do, it kind of starts breaking up the records and act as a natural tumbler. And this is something that is very frowned upon as well. So these are a lot of more innovative challenges that not only DeFi and the innovation, but RegTech will also face in the future when solutions are going to start looking for these, or DeFi or even virtual as a service providers will start looking for these solutions in order to start complying with the ever-changing regulatory landscape.
I think that's great insight, and I think what you're saying around this whole anonymity versus privacy point is important to draw out. I know, sort of in preparation for today's session, we'd sort of discuss potential topics, and I think what you've just said, obviously, I think takes us down the route of maybe a discussion about travel rule and
yes,
sort of the transaction data sharing and that sort of thing.
Yeah.
I guess in any case, we can't really have a panel session around crypto and RegTech without talking about travel rule adoption.
Yes.
So in terms of what you're seeing, what is the current status, sort of from a general perspective, around travel rule adoption and implementation, maybe regionally, globally, and any particular views around sort of where we are today, where we might be 2 or 3 years from now, and if and how that might actually help address some of these issues that we've just been discussing.
Certainly. So, at the very start of the travel rule, once it was discussed, not a lot of people paid a lot of attention to it, but now that they're forced to pay more attention to it, it has become a very large topic. Initially, we started off with applying a base standard, right? Because what we were seeing was a sunrise industry. Everyone was coming up with their own solution. Everyone had different data sets, and it was very messy at the very beginning. And that's where IVMS 101s came in to define the base layer, define that messaging standard from one solution to another solution. And this, I think, was bringing back to my earlier point of integration, between the different solution provider, because not everyone uses the same solution, but at the same time, because the users of the solution needs to have interoperability between the different VAS. If, let's say, for example, if Crypto.com were to receive assets from, let's say, FTX exchange, right? And I think I've seen this more and more, especially as a Singapore user, because Singapore was one of the very first countries to really push it into the Singapore virtual asset service providers, and those who are attempting to obtain their license have been putting this in as well. I think I made a transaction a couple of weeks back, and I saw that it was not processed yet. But when I opened my app, they said, "Okay, where did you transfer this from? Please select an exchange." Right. The flow will eventually get better, because this is very, very important. When you have to send the originator and the beneficiary information from one VAS to another VAS. And I think this particular layer over here, after assessing some solutions, that it's good to see that it's highly encrypted, and that it is still the responsibility of the exchange to protect, let's say, my own privacy when I transfer crypto assets from one service provider to the next. We are pushing, or we are seeing a push for more adoption of this, especially to different countries as well. Those who are looking to license or issue licenses towards regulating them as a virtual asset service provider. And with this, hopefully, what we see is a much more widespread adoption. At the same time, is that we are also updating the standards from IVMS 101 to IVMS 102. This is also very new, because we do need to constantly update these standards in order for interoperability to really shine in this scene.
Okay, great. Thanks for sharing. Ajinkya, can I just check whether you can hear us?
Yeah, let's get some of the shot. I'm not sure how long we crossed out.
Maybe let's give it a go. You sounded a little patchy there, but it did sound a little better than earlier. So we were just talking about just to start off, what opportunities does regulation give rise to in the context of cryptocurrency, and then we pivoted from there to discuss privacy versus anonymity. And Frederick was just explaining sort of where things stand today with regard to travel rule adoption and sharing a bit of insight on that. Are you able to maybe add to that discussion and share some perspectives from what you're seeing?
Absolutely. So the keywords of work is important. So you're absolutely right. I think there's a number of elements here when we look at relation between travel rule adoption or GDPR concerns and so on and so forth. There is one extra element I'll just quickly cover, which is within the transaction monitoring space and compliance generally, I should say. Now, with transaction monitoring, one thing that we need to bear in mind is there are now 50, 60, 100,000 different coins out there, each with their own design set up and nodes. And now the trouble is that you can make this available to the general consumer, general customer, the retail customer to buy and invest in. However, they may not be supported for transaction monitoring purposes. What that means is, as an exchange or as a regulated financial institution, I may not be able to track the transactions on one coin as well as I can do it with another coin. And this has pretty far-reaching ramifications if you try to be compliant payment institution or a vast virtual asset service provider, or what's coming in Europe next to Amiga. And this really is a big concern. And as you can imagine, there are opportunities for a number of players out there to also the transaction monitoring services, but naturally they prioritize based on where the bulk of the trades happen. If there is a point that trade once a month, they're not bother developing an entire tech backup ecosystem to be able to send as Bitcoin. So that staggered approach has been applying for GDPR concerns. So if I don't know where the data is going, I don't know who is going to be buying on the other side, I can't confirm if the GDPR compliant personal data management is happening in the proper way. And I can't even tell you the data is leaving the European Union or not. So it kind of has really a 360-degree impact on how you can really manage the risk that arise in crypto asset trading. There is the other bit we're discussing, which was how regulators, they're definitely onto it. They understand that there are challenges in this space. Now, when GDPR was drafted, when financial services regulations were drafted, when MiFID and all of that, they didn't have crypto assets in mind, and there was little to no opportunity or any wiggle room. Well, if it's a crypto asset and if it's a rarely traded coin, and Section 4432 may not be applied for the first 6 months. We don't quite have that. Everything starts on day one, and you need to prove and display your compliance every 6 months. When so that's one of the biggest issues that we find within the industry.
Okay.
You have a follow-up question, Matthew? I'll let you.
No, I was just going to say, I think we're still struggling with your connection. You were still dropping in and out, but I think if I'd understood correctly, I think what you were saying was that obviously the volume of different crypto assets out there presents difficulties. Each one is constructed differently, different characteristics, where you have interactions between different coins across different platforms that multiplies sort of the level of complexity. And then also if you overlay the fact that a lot of the regulation that currently exists was never really designed for these types of applications, it does create a lot of difficulty in terms of how regulators perhaps are thinking about some of these assets versus how they're being used and potentially what they need to be thinking about alternatively. And I think if that's a fair summary, I think that is, I think, similar in a way to what Frederick was mentioning before around some of the interactions across platforms, interactions between different currencies. And I guess it also, I think, provides a nice segue into something else I was interested about, which is that there is, at least from what I see day to day, there is seemingly often a knowledge gap between crypto stakeholders on the one hand and regulators on the other. And I guess one thing that I'd perhaps be interested to hear from you both is what you see as some of the key challenges arising in that context. And based on your experiences, if there are any particularly good ways at helping navigate that challenge and that disconnect.
Sure, I can try my luck with the connection and go first.
Yeah, sure.
Absolutely. I think there is a widening gap, I would say, between tech space, generally speaking, and the relevant regulators. In the US, that gap is very wide, and it's getting wider by the day. Now, there are regulators who have proactively taken some steps to close the gap, either by recruiting from the industry, hiring subject matter experts, having a sandbox program, and so on and so forth. But the truth of the matter is, there is simply no way a regulator can really keep up with all sectors all the time. That's just not realistic. And we've got one, I wouldn't call it a rogue sector, but one sector that's on boosters. It's really difficult to keep up. So the challenges there are twofold. Firstly, regulators have this reactionary approach when something goes wrong. The first thing they'll do is, well, that's the law, and you didn't comply, and that's that, finished. Well, it's not as simple as that anymore, because the law isn't fit for it, number one. And number two, we can very validly argue that the legal regime that has been set up doesn't even apply to crypto assets. And that's what's happening with the UK for the longest time. Crypto assets are unregulated asset class. So that's kind of the number one problem. The number two problem they have is, okay, well, if that's the case, well, here's a new ordinance that says US crypto assets from have to do 1 to 10, and they just kind of shove it all on because they didn't know what else to do. Mm-hmm. So it's kind of the 0 to 100, and there's nothing in between, and that's the real problem I see.
Yeah, that's an interesting one, isn't it? Because I think it, like you say, the technology and the applications are developing at such a fast pace that it's difficult for regulators to keep up because they're not on the ground, sort of participating in the actual development, and they're always maybe on the back foot and not necessarily resourced in a way, or have the industry or technology knowledge or expertise to be able to adapt or flex how they're approaching these sorts of things. Frederick, what are you seeing in terms of, I guess I'd be particularly interested in what your perspectives are from Singapore, given that I think in Singapore we have, in the DMAS, a very sort of proactive, engaged regulator. What are you seeing in terms of some of those challenges, and are you able to comment more so on what some of the ways that just addressing that gap are that you potentially seen work successfulely?
Yeah, so I'm just going to start off with, even I am having trouble keeping up with the rapid.
Me too.
I remember being in DeFi ever since version 1 of Uniswap, right? And in manual market making with high frequency trading bots, and how it has evolved and developed from there. Especially with bridges, and I find it very difficult to draw parallels with what we are seeing in our own world and how it operates in the decentralized world. As a very heavy user of DeFi myself, right? I do like to experiment with it and learn about it, and what we've been doing at Access is also been engaging with the industry to talk more about it. But at the same time, sometimes we do have some conversations with the regulators to really try and layman some of the things for them. One of the very interesting examples that I always like to use is over collateralized lending. Right, it's kind of like walking into a pawn shop. Instead of pawning my gold watch, now it's Bitcoin, right? And instead of them giving me cash, now it's algorithmically generated stable coin. It always helps to draw that parallel for them, but it's a lot of education process, not only for ourselves, but trying to make it layman for them to understand. And as I use DeFi along the way, it has always been in more towards building blocks, right? Because if you've seen the entire industry and how and how innovative it is, and how it actually builds one protocol on top of another protocol, and that's where it starts becoming a little bit more complicated, but a lot more interesting. Where they are really concerned has always been with the money laundering and the if a bad actor is always able to use this for malicious actions, right? And this is something that sometimes we also do think about, and to see where their concerns are, and to be able to see if we're able to address them, right? It's definitely a very interesting exercise together with regulators and even with industry members. Me personally, I'm on like probably 300 or 400 different Discord channels, trying to talk with the developers to see where their direction is, where they're heading towards, and what they are looking for, and try and bring these two together. Definitely, the knowledge gap is wide. What has really worked was that when we take the core principles of let's say borrowing and lending, decentralized borrowing and lending, and over collateralized loans, and all of these core products that has been built and has lasted throughout the DeFi boom in the past 2 years, 3 years. This has definitely assisted it. But then now that we are shifting towards a next level of decentralized finance, right? And I think what really would help is if the tools that are readily available today will also update together with it, right? Because let's say if we're talking about hack, right? One of the more famous ones, Axie Infinity. What happened was that there was a lot of transaction monitoring tools that actually produced after action reports, right? And trying to explain what happened. I think these reports, these insights into what has actually happened is very good for the industry in general, because then we get to see where the vulnerabilities are, where did the money actually flow to. And the good thing with blockchain or right now, it's still that most of it is still traceable, barring any tumblers. But it's still in a sense traceable from that angle, and that we see that we are able to find out where it has went to.
It's interesting, isn't it? Because I think a lot of time we talk about regulation, at least from an industry perspective, as though it's potentially a bad thing. But I think what's coming out as part of this conversation, I think, is actually that's not necessarily the case. It's just that the technology is really challenging the traditional regulatory approach, and it's causing or it's prompting the need for the developers, for other stakeholders, to proactively engage with regulators in a way to try and identify what the core rationale and the core objectives of regulation are, in order to then figure out how those core objectives can be satisfied given this huge change in dynamics and the way sort of some of the transaction infrastructure and some of the technological infrastructure is developing. Yeah. So I think I'd be interesting to know your thoughts, but to my mind, it's perhaps fair to say that this is maybe just part of the maturation process. The technology is challenging some of the ways things have been done in the past, including from a regulatory perspective. Yes, there is a bit of a gap between where things are today and perhaps where regulators want to be. But the way forward is through proactive engagement between the different stakeholders, identify these issues, and then to try and identify how best everybody can work together with a view to just trying to make sure that that middle ground is properly identified and then workable solutions are adopted. I mean, what's your view around that? I mean, do you think that's a fair summary? And is it really the case that sort of the regulation ultimately is going to be a good thing and is going to be something that has to be settled before we start to see much greater adoption of crypto and blockchain more generally?
I do generally agree with that statement. Is that to say that no regulation would to be honest would just make crypto a big cowboy town, right? And I think that is something that we want to also try and avoid. But at the same time, is that too much regulation will also mean that it tries and slow down the pace of innovation. While developers will always find new ways to go around it, it's always best for them, for us to as an industry to really pull together different stakeholders and really discuss it out. It's like the traditional ways of regulating crypto or the blockchain industry really would.
Hi. So sorry to cut you, Frederick, there, but we have 3 minutes for the session. So if you guys could wrap up your speeches would be great. Thank you.
Sure. Yeah. Then I'll probably start ending with this statement: is that the traditional methods will already are beginning to not work in our space. They would have to be a little bit more innovative and open-minded to
a bit more pragmatic.
Yes, a bit more pragmatic approach to really try and look at this from a different angle as well.
Absolutely. And Ajinkya, what are your thoughts around those issues? And
I think there is one element I would focus on as a parting comment, and that would be the main issue I take with ex-ante regulation, which is what we see in Europe with MiCA, markets and crypto assets regulation. And that is that there is no mechanism that's built in to check if down the road there are any unintended consequences of that regulation, or if it's actually serving the purpose it's meant to serve. The second associated trouble is the life cycle of the regulation.
I think we might have lost Ajinkya, but I think I understand what he was broadly saying. I guess the point being that traditionally regulation has always been backwards looking. It's been about monitoring, identifying exceptions, and then taking action on a forward-looking basis. I guess the way I personally interpret that is, if you think about the pragmatism that's necessary, the way the technology is working and the level of interaction with regulators, it perhaps becomes a bit more necessary to try and figure out how to do things in real time, interact with regulators, be a bit more pragmatic and work with them hand in hand in order to address some of these issues. Obviously, as of today, it's not clear how that is best achieved. It's still a work in progress. But I think one of the key takeaways from this session is perhaps that it is a developing area. We do see a lot of movement. Hopefully over the short to medium term, we'll be having more conversations like this that further advance the discussion. And I guess with that, I hope everybody has found today's discussion helpful, insightful. Thank you both, Frederick and Ajinkya, for joining and contributing to the session. We haven't received any Q&A through the console, but if anybody does have questions, feel free to reach out to any of the panelists or to me directly, or indeed to RegTech Revolution. And I guess with that, thank you to RegTech Revolution for helping organize the session. And Sabrina, over to you.
Thank you so much. Thank you, Matthew, Frederick, and Ajinkya for today's session. It's unfortunate that Unak couldn't be here and the connection wasn't that great, but it was a good informative session. See you soon. Thank you.
Thank you. Thanks, everyone. Bye.